In today's video, we're going to focus on Year 12 Accounting in Queensland Unit 3.2, the IA2 QCAA sample of 2019. I'm going to look at Part B, which is a practical item. Now, this looks confusing to the students because most textbooks will just give you the balance day adjustments in sentences or additional information underneath the trial balance. Students should just stay calm and realize that in this way this exam is set, it's still balance day adjustments. It's just the way it's given is a bit more complicated. Now, important, it says they're under task to identify and correcting the conceptual areas in the general journal extraction which was given. It also says note, correct the errors but do not identify them. To me, the more important thing is, and you'll probably get an Excel sheet with the statement of profit and loss and statement of financial positions with these mistakes. My tip to my students are do not waste too much time to look for these errors. If you're confident in doing balance day adjustments and your statement of profit and loss and statement of financial position, just do it as you normally do it. Don't waste too much time looking for the mistakes. So I'm going to concentrate on B, the statement of profit and loss and statement of financial position, and not concentrate too much on the errors. So if we look at balance day adjustments, as I said, textbook normally just gives it to you in a sentence. What they've done here is trying to make it more difficult or mix it up a bit. So if we look at the first one, they basically said we have a term deposit, $20,000, 3% interest per annum. More importantly, we know the financial year ends the 30th of June. We've received interest already during the year after 6 months. That's evident in the trial balance extract. So we have to now calculate the interest for the next 6 months. That's 20% times 3% times 6 over 12, or you could say times a half a year. And that gives you $300. This is accrued. This is owed to the business, which is accrued revenue, which is an asset which will increase on the debit side. The $300 is also then interest revenue, and that is our revenue, as the name says, and that will increase. So that's the first adjustment. There is my trial balance extract, and I'll just go and write on the paper 300 plus 300, the new amount for interest revenue that will go to the profit and loss statement will be 600. Accrued revenue, I already mentioned, as an asset, so that will go to our statement of financial position. If we look at the next one, this one is all about inventories, and this is normal at the end of the financial year. Most businesses do take a stock take. Now here it says the annual stock take was conducted last week and revealed a shortage, 20 discs at $10, 10 calculators at $20, 10 memory sticks at $10 each. So I've highlighted the different stock takes and calculated the amounts that was missing. So here we know inventories, the asset should decrease. That means we will credit it, and we will have inventories adjustment, which is a loss to the business or regarded as an expense. So if we go further and we look at our extract of the trial balance, I'll just go and write the minus 500, or just go straight to the 21,500, delete it and write 21,000. I add an account called inventory adjustment, which is an expense, which will go to my statement of profit and loss. The next one was another post note, and here it said important information. End of the financial year is on a Saturday. Employees are paid weekly, where they week for 5 days from the Thursday to the Wednesday. They also gave you the weekly salary. So what I like to do is draw a little sketch to myself, and there you can see the blue line, the vertical blue line shows the 30th of June, the end of the financial year, which is on a Saturday. Before that, I know the week starts on a Thursday, so the Thursday, Friday is still part of the current financial year. Sunday, obviously, they don't work. The Monday, Tuesday, Wednesday, although they get paid on the Wednesday, is not applicable to this current financial year. So if you look at my calculation, I went 2,100 divided by 5 days gives me $420 per day. If you look at my sketch in red, there's 2 days that is accrued. We would owe that money up to the end of the financial year. So 2 days times $420 gives me $840. Salaries or wages, in this case, is an expense. An accrued expense is here a liability, not the A. So hopefully you've picked that up. Accrued expense, the liability would increase. If we go to our trial balance, I would just go add the 842 wages, thus become 110,840, and accrued expenses, a liability, would have a credit balance of 840. Next one was an asset register. Instead of just telling you motor vehicles depreciation was, etc., etc., they gave you asset register. Now, you've done this in the last module. Important thing here is the diminishing balance method, which means I got to go now to the end of this financial year, and you can see in blue I've written there 2019, the 30th of June. I've now calculated it. Now, the diminishing balance says the cost price minus what has already been written off, the accumulated depreciation at that time. So there you see the calculation, 60,000 minus 16,500 times 30% gives me depreciation for this year of 13,050. My accumulated depreciation is now the 16,500 plus the 13,050, which is a total of 29,550. You will see I will debit my depreciation, which is an expense, and credit my negative asset, accumulative depreciation. If we look then at the trial balance, I've written the depreciation, and I'm going to see this as one expense account. I know lots of schools use depreciation and they mention motor vehicles and then have depreciation for furniture. To me, it's one expense that I write off the end of the financial year. However, the cumulative depreciation accounts I've got to show separately. So there is my accumulative depreciation on motor vehicles, the total, and that will go to my statement of financial position. If we look at the second one, we have furniture straight line, which means every year we're going to write off the same amount. I've made a few calculations. Firstly, we got to do this on the 30th of June. I've written on top there where it says estimate life 4 years. So what percentage do we write off? We want to write off 100% over 4 years, which means we're going to write off 25% per year. Straight line method, when we get an estimate residual value, we go the cost price of $10,000 minus the residual value times 25% means 2,000. Now, if you would have wanted to do it quicker, you would know when we talk about the straight line method, every year we're going to write off 2,000 anyhow. Important is, again, I would debit my expense and I would credit my negative asset. Look now at my trial balance. You can see there I would have depreciation, add the two together, and I would write that off in my statement of profit and loss. Cumulative depreciation on furniture will go to the statement of financial position. If we look at the next one, and this is important, this time they gave you an email and all they said is that accounts receivable, which was currently 34,000 according to the trial balance, the provision for doubtful debt on this should increase from 3% to 3.5%. Now I've done the calculation and there you see 34,000 times 3.5% is 1,990. This is what the business wants to provide for possible bad debts next year. So remember the 4 steps when we look at doing this. Originally, provision for doubtful debts has a credit balance because it's a negative asset. Bad and doubtful debts is an expense and have a debit balance. Step 1 is we take that bad and doubtful debts to the provision of doubtful debts. So I credit bad and doubtful debts and I debit provision for doubtful debts. Step 2, you calculate now what should the new provision be. Now I've already done that in red. The new balance should be 1,190. To apply the accounting principle correct, you first got to carry the balance down on the smaller side and then bring the balance down on the other side. And I've already told you provision for doubtful debts is a negative asset, should have a credit balance. Step 3 now, the difference between this debit side and credit side of provision for doubtful debt is what you're going to take to the bad and doubtful debts. That's step 3 there in pink. That's the difference that I had, and that came to 1,620. I would now take that to bad and doubtful debts, and you can see I've debited bad and doubtful debts. And now my closing transfer will be, I will take that amount to the profit and loss. You're not going to do the profit and loss account. However, that's the amount that will go to the statement of profit and loss. So there's the accounts again. And now if I look at my trial balance, provision and doubtful debts will be 1190. That will go to the statement of financial position, and bad and doubtful debts will go to the statement of profit and loss. So if we look at this now, and this is the solution they gave you, there is our statement of profit and loss. You will see inventories adjustment in there as 500. We've fixed wages. We had fixed the depreciation. Yeah, they show it separately. I do not have a problem with one depreciation account and have that as 15,050. You also see bad debts was written off that 1620 as we calculated it on the previous slide. If you look at our statement of financial position, also known as a balance sheet, we've adjusted the provision for doubtful debts to the 1190. We worked it out. We've looked at inventories and we've adjusted that. Accrued revenue, we added the 300 to that. And that should just be 300. That 600 shows it's one of the errors we've made, or not we've made, the accountant before us. And then you also look at accumulative depreciation. We have now new totals there. So if you look at this again, I did not look at any of the mistakes made in the journal because I feel students will waste too much time if they under stress. If you know how to do it, just approach it as normal. That would be my tip. I hope you found this helpful. And remember, accounting makes the world go round.